Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Japanese stocks rise while the yen slides as investors brace for the departure of a fourth prime minister in 5 years. The focus now on who will succeed Shigeru Ishiba. And in France, Francois Bayrou's government looks set to collapse today as he faces an uphill battle to win a confidence vote. We will discuss what it means for the country's massive debt load and, of course, for wider markets. Plus, keep on pumping. OPEC-plus defies the Doomsayers with another boost to oil production as the alliance looks to grab more market share. Happy Monday. Let's get to the markets then with European futures on the front foot, putting to gains of 0.4%. The FTSE 100 here in the UK after a major government reshuffle amongst the cabinet, pointing higher by 25 points. S&P futures still digesting, of course, confirmation of a weaker labour market in the US with the non-farm payrolls dropping on Friday, and markets now pricing in almost 25 basis point cuts from the Fed by the end of this year, currently pointing to gains of the S&P just 0.1% after a little bit of weakness on concerns about the labour market come the end of the session on Friday. Nasdaq 100 futures pointing to gains of 53 points. Let's flip the board and look cross-asset then. We saw, of course, the rally, particularly at the front end of the Treasury curve on Friday. Some of that being paired in the session today. The 10-year currently at 4.09, yields up 2 basis points. The pound in focus on the back of that reshuffle, 134 on sterling. A little softer in the session by 0.1%. Dollar strength coming through again in the session today. Brent in focus, of course, after OPEC-plus decided to put more barrels on the market. $66 a barrel right now, up 1.2% because of prior expectations that maybe OPEC-plus would go a little bit further than that. Gaining in the session then oil. The yellow metal, a little softer, gold by 0.1%. Let's check in on the Asian markets then. The focus, of course, on Japan with confirmation that the Prime Minister will be stepping down. So the yen weaker and Japanese stocks rallying. The Nikkei 225 gaining 1.4%. And that is on the back of the strength that comes through on a weaker yen and what it means for the manufacturing base, of course, of Japan. The yen then at 148, down 0.5%. Again, bolstering some of those manufacturers, or at least expectations. And that is leading to the rally in Japanese stocks. The CSI 300 over in China with further softness in terms of the export story there, currently flat on the mainland market. So the resignation of Japanese Prime Minister Shigeru Ishiba has set in motion a leadership race that will be, of course, closely watched by the markets and global investors.
I thought that as Prime Minister, I needed to take responsibility for the results in the election. Having seen the U.S. trade negotiations through, I felt that now was the right time to stand down and give way to my successor.
Well, Ishiba says he will stay on as Prime Minister until his successor takes over. Bloomberg anchor Sherry joining us from Tokyo. Sherry, what is the latest then? What are we watching for in the hours and days ahead?
We are looking for the exact date when the leadership election of the LDP will take place. We are hearing that we might get an announcement on Tuesday. Local media reporting that the election could take place in early October. We're also looking out for the rules around the election. Will they be held under emergency rules? Local media now saying that it will be a full spectrum election. What that means is that lawmakers and rank and file party members will have and control an equal number of votes. What that means is that potentially that could benefit candidates with broader public appeal. The list of potential contenders, just a handful, that looks pretty similar to the leadership election less than a year ago. We're talking about Sanae Takaichi, a hardline conservative, topping the list in many recent opinion polls. Now, she narrowly lost to Ishiba last year. She's seen as a candidate who wants easy monetary policy, perhaps a reversal to Abenomics. Shinjiro Koizumi, also the agriculture minister, is a contender, a potential contender here. 44 years old, would represent a newer generation here in Japan. Also, we're hearing from local media that Chief Cabinet Secretary Yoshimasa Hayashi could run for LDP head. And of course, what that means is that they could become the next prime minister.
And Sherry, you touched on some of the potential economic policies of some of these candidates. Talk us through how that's feeding into market views then as we see this rally in Japanese stocks, but pressure, of course, on the currency.
Whoever wins the LDP election and becomes the next prime minister of Japan will likely open the fiscal taps. That's because Prime Minister Ishiba was already a fiscal hawk. So even if you get somebody like him, the fact that the LDP does not control the majority in both chambers of parliament means that they need to negotiate with opposition parties. Because of that, we continue to see now stocks in Japan gaining ground. We are also seeing some of those nuclear-related stocks, utilities, for example, gaining ground. Sanae Takaichi is seen as a pro-nuclear candidate. She could lead the election in October if it's held in the early days as reported, but also the fact that we are seeing a weaker Japanese yen because the front-end yields are lower at the moment, with the expectation that perhaps the Bank of Japan will also need to delay its rate hike that some had seen as early as October is factoring into the markets, with exporters now gaining ground. And this, of course, at a time when we are seeing a resilient Japanese economy as well. Earlier today, for example, we had second quarter final GDP data surprising to the upside, but really the pressure has been on long-end JGBs because of those fiscal concerns. Whoever comes in might lead to more fiscal spending, and what that will mean for really the debt burden here in Japan is a big question at a time when demand for these JGB auctions has already been pretty weak.
Yeah, well, therein lies the global significance if we continue to get a further sell-off in the long end when it comes to Japanese bonds. Bloomberg's Sherry, and of course, anchor for us covering the changes and adjustments in terms of the politics of Japan and the market implications. Sherry, thank you. Let's turn to the politics of France right now. Turmoil in France, where Premier Francois Bayrou is likely to lose his job in a confidence vote today. But the real risk for investors lies beyond this event and what is to come over the coming weeks or months. France's inability to fix its public finances has led to 3 governments in little more than a year, inspiring little confidence in a 4th government, if that's what we get at the end of today. For more on the political risks, we're joined by Bloomberg's Caroline Conat, who is outside the National Assembly in Paris for us. Caroline, is that the right way to frame it, that Bayrou's removal is essentially a done deal, or is there something he can pull out of the hat last minute? What are we watching for?
I'm afraid it's pretty much a done deal, Tom. In fact, the charm offensive of Francois Bayrou last week, meeting with all the opposition parties, hasn't really paid off. The socialists and the National Rally have both said they will not support this vote of confidence. So Bayrou will likely fall tonight, 98% chances according to Polymarket, 30% actually believing we might see new snap elections in France going forward. Of course, what happens next is in the hands of President Macron. The most likely scenario in the short term is that he will name a new prime minister. Will he go this time for the technocratic route, or will he go perhaps for the socialist route, something he hasn't tried yet? The problem with going for a socialist prime minister is, of course, potentially losing some of the support from the moderate right wing, the Republicans. The current Interior Minister, Bruno Retailleau, has already said, for example, that he will not join a government that includes some socialists. And of course, the socialists have already presented their alternative budget, and clearly the savings in a potential socialist budget will be watered down. But the likelihood, Tom, that here tonight at the National Assembly we're going to see another government collapse in France in 9 months is really high, and we'll probably see over the next few days a new prime minister in France, 5th prime minister in less than 2 years.
Wow, a 5th prime minister in less than 2 years. You're giving the UK a good run for its money, given our recent past. What is the implication then, Caroline, for the markets and the French economy?
So, of course, we've already seen the reaction on the markets over the past couple of weeks since Bayrou called this vote of confidence on August 25. We've seen the impact on the French banking stocks. We've seen the impact on the construction stocks in France. And, of course, on the spreads, the spread between the French and the German 10-year yield increasing by about 10 basis points, around 80 basis points. And, of course, we could see this situation worsen in the case, which is unlikely, of a resignation of President Macron. According to CT, the spread could go up to 125 basis points. But as I was mentioning, obviously, the danger perhaps for the markets would also be an increased uncertainty and potentially further down the road, not enough tightening of public finances. According to Bloomberg Economics, for example, if nothing is done in terms of the debt load of France, the debt to GDP ratio could go from 115% today to 125% by 2030. So perhaps in the short term, Bayrou's fall is priced in by the markets, but the longer term fiscal uncertainty for France is not fully priced in yet.
OK, Bloomberg's Caroline Gonnin in Paris for us, on the ground for us on another pivotal day for France. Caroline, thank you. To the US now, where President Trump has confirmed the top 3 candidates to replace Fed Chair Jerome Powell, including White House economic advisor Kevin Hassett, Fed Governor Christopher Waller and former Fed Governor Kevin Warsh. In an interview yesterday with Face the Nation on CBS, Hassett spoke about the role of the central bank.
Central bank independence is something that, as you saw, there was a hearing this week about that Democrats and Republicans in the White House all agreed about. Now, the question is, has the current central bank been as independent as we would like, as transparent as we would like? And I think that there's some dispute about that.
OK, so let's bring in Bloomberg's Valerie Teitel now. So, Val, we are down to 3, it seems, at a time when traders now, markets are pricing in almost 3 cuts from this Fed by the end of the year.
Yeah, we're still pricing in that dovish shift from the Fed, regardless of this Fed chair pick, but maybe a bit of comfort to the markets that a wild card candidate hasn't made it into the final 3. We just heard from one of those candidates, Kevin Hassett, just there speaking on the Sunday press. He was asked if he was preparing an overhaul of the Fed. He said that was something he currently isn't working on, but it comes a few days after Treasury Secretary Scott Bessent wrote an op-ed in the Wall Street Journal calling for a review, an independent review of the central bank, including its monetary policy framework and its powers. Kevin Hassett was also asked what he thought of the BLS data, if he thinks he can be confident in it. He is backing the administration's view that the data does need to be improved. The surveys do need to be modernized. And this comes after Friday's payroll showed a weak headline number and also more downward revisions to prior data. If you flip the board, June was revised negative in that data, and those revisions don't stop there, Tom. On Tuesday, we get the Bureau of Labor Statistics preliminary yearly benchmark revisions in the 12-month through March 2025. Our own economist, Anna Wong, sees that there's risk that even October 2024 could be revised into negative territory. But all this pessimism about the U.S. labor market has had the market price in more cuts from the Federal Reserve. We're pricing in just a fraction of a chance the Federal Reserve could actually go 50 basis points at their meeting in 2 weeks' time. But before that, we have to get through CPI data, inflation data dropping on Thursday, with headline inflation expected to rise to 2.9% and core inflation expected to be above 3% for yet another month. You could argue that this pricing is a bit overzealous for the time.
OK, we look ahead to that inflation print later this week. Bloomberg's Valerie Teitel, thank you. To South Korea now, which says it has secured the release of hundreds of its citizens detained in a massive US immigration raid at a Hyundai LG battery plant in the state of Georgia. The move sparking investor anxiety and, frankly, anger as well in South Korea as US Border Czar Tom Homan vows future raids.
We're going to do more worksite enforcement operatives because, number one, it's a crime to enter this country illegally. Number two, it's a crime to knowingly hire an illegal alien. And these companies that hire illegal aliens, they undercut the competition that's paying U.S. citizens salaries.
OK, for more, let's bring in Bloomberg's news desk editor, Balash Pence. Balash, a pretty remarkable story, the images of, well, coming out of Georgia. And this isn't just about one particular workplace raid. This has much broader significance, right?
That's right, Tom. This story has sent shockwaves through Korean business. And first of all, when it comes to this particular plant, we heard from the company that opening of this plant, which was in the final stages of construction, might be delayed at least 6 months. So it will be some time before production can actually start. But when we think about the broader relationship between the U.S. and South Korea, one of its most important trade partners, a lot of Korean companies have pledged billions of dollars of investment in the U.S. And yes, part of the method when they are setting up these plants is they are setting their own workers, they are sending their own subcontractors to work on the construction of these plants. So these companies, whether it comes to Samsung, Hynix, Hyundai, or LG, they must be thinking about what it means for those pledges. The U.S. trade deal with South Korea included $350 billion of investment pledges. You have to wonder what's going to happen with that money. What happens with the shipbuilding association that the U.S. and South Korea announced? How can these companies plan? What does it mean for their operations in the U.S.? A lot of questions, and indeed, as you said, a lot of anger in South Korea over this story.
OK, Bloomberg's news desk editor Balazs Pence with that update. Balazs, thank you. And the broad implications of that raid, of course, in Georgia, the US. Coming up, OPEC-plus pushing its bold strategy a bit further with another oil production boost. Prices are higher in the session. We bring you the details. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So, oil climbing after OPEC-plus agreed to raise production once again, but at a modest rate, highlighting some caution from the group as the market heads into an expected surplus. OPEC-plus says it would restart 137,000 barrels a day of output, defying warnings from Wall Street that the move risks compounding a supply glut. Joining me now is Stephen Stupczynski, Bloomberg's Asia energy team leader. Stephen, talk to us about the implications of this then. The markets are higher, oil prices are higher, and that's despite the fact that OPEC-plus are putting more oil on the market. Just explain what is going on.
So I think the decision over the weekend was shock with no awe, right? You know, there was a surprise that they're adding barrels back into the market. They've surprised the market many times before, and you saw oil prices sort of slip last week with maybe some people hedging their bets, reducing their bullish bets just in case they're getting surprised again. But then when you look at the actual number, 137,000 barrels a day, that is less than the previous 2-month increases. Likewise, this means that they could unwind over the next year basically that remaining 1.6 million barrels a day tranche of supply decreases that they had before. So this overall is being digested by the market as not the worst case scenario. They also want to see what happens going forward if they actually do increase supply this much, because there are a lot of uncertainties which within the OPEC-plus bloc. Saudi Arabia does have the most that they can bring back, but there are other countries that have been increasing over their targets. That means that they might not actually increase next month. Likewise, there are other countries that can't increase. They don't have the spare capacity. So how many actual barrels reach the market is another question. So I think folks are also waiting for that. Now, going forward, there will also be a focus, again, on winter, because when you look at that, that could also increase the sort of bullish situation for the market.
OK, Stephen Stupczynski, Bloomberg's Asia energy team leader, with a context on what to watch as to whether or not these barrels will actually be put onto the market, whether some of those OPEC-plus members can actually manage to do that, given some of the challenges they face. Coming up, thank you, Stephen, coming up as the world becomes increasingly reliant on AI, are we ready for the surge in power demand from the data centres behind the technology? We'll have that story and break it down for you. That is next. This is Bloomberg.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom Mackenzie in London. Watch Bloomberg Tech Europe. New episode Friday, only on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, around the world, economies, of course, are increasingly reliant on AI, at least moving in that direction, and fueling a surge in data center construction and in the power those data centers use, which is significant. Natalie Libanda-Brata, an analyst for BloombergNEF's US power team, joins us to discuss the significance of that power demand growth and what the trajectory is. So talk to us. Good morning. Thanks for joining us, Natalie. There has been this huge demand, of course, and we're seeing data centers being built out in the Middle East, in the US and Europe as well. What are we seeing in terms of the demand for that AI and what it means in terms of the size of some of these data centers?
Yeah, so we're seeing AI data centers being much larger than traditional data centers. Last year, a typical data center was 15 megawatts. The ones designed for AI workloads are now in the hundreds of megawatts. And in the US, we're even seeing gigawatt scale. A gigawatt is about the power a small to mid-sized US city needs. And this really has to do with computing power that training these large language models need, and this is only set to grow. Gigawatt data centers,
yeah, we're seeing reports of that. What does that mean? I mean, how much energy is a gigawatt data center going to need, essentially?
It's going to need a lot. We're seeing that global data center usage will quadruple in the next decade. Today, we estimate that data centers are about 1.5% of global electricity demand. In 2035, this could quadruple to close to 5%. In fact, if data centers were a country, they would be the fourth largest energy consumer in the 2030s, only behind US, China, and India.
Talking of the US, in terms of the scale, the size and scale, the largest data center market today, how much power will those centers need compared to, for example, other sources of demand like electric vehicles? How does that compare?
Yeah, so the U.S. is home to the major tech giants who are all racing to build the next generation of large language models. So we see that data centers are by far the largest source of near-term power demand, outpacing that of electric vehicles, hydrogen, or any other sector. Yeah.
OK, so it doesn't really compare. It's just that demand for energy for data centers is just going to outstrip EVs.
Yes.
And so that's really significant going forward. Natalie, thank you very much indeed for breaking down what is happening in terms of the data center build and what it means for power demand, the challenges. We're seeing that on the grid already in the US, aren't we? Natalie, thank you. Natalie Libanda-Brata, who, of course, is covering this for us from BNEF. And all the details, of course, you can find on Bloomberg.com and on the terminal. Sticking with tech news, Reuters is reporting ASML is poised to become the biggest shareholder in French startup Mistral AI, but taking a 1.3 billion euro stake. That's according to the report, of course. The Dutch semiconductor equipment maker is putting up the lion's share of a new fundraising round that will give it a board seat. But both ASML and Mistral have declined to comment to Bloomberg. We reported last week that Mistral was finalising a 2 billion euro investment that values the company at 12 billion euros. And President Trump has threatened to investigate the European Union after the bloc fined Google 3 billion euros for allegedly exploiting its advantage over rivals. The EU also ordered the search giant to stop favouring its own advertising technology services. Trump called the action very unfair and said his administration will not allow the, quote, discriminatory actions to stand. And China has confirmed that President Xi Jinping will take part in a virtual BRICS summit today, convened by Brazil, to discuss Donald Trump's trade policy. She will be joined by Russian President Vladimir Putin, but India's Narendra Modi will skip the meeting. Coming up, we will be speaking with Douglas Yates from the American Graduate School in Paris about what happens if the French government falls, which looks increasingly likely. That analysis is coming up. What next for France? That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Monday. I'm Tom McKenzie in London. These are the stories that set your agenda. Japanese stocks rise while the yen slides as investors brace for the departure of a fourth prime minister in 5 years. The focus now on who will succeed Shigeru Ishiba. And in France, Francois Bayrou's government looks set to collapse today as he faces an uphill battle to win a confidence vote. We discuss what it means for the country's massive debt load and for wider markets. Plus, keep on pumping. OPEC-plus defies the Doomsayers with another boost to oil production as the alliance looks to grab more market share. European futures on the front foot this morning. Fed bets, of course, underpinning some optimism across these equity markets on a weaker job sprint on Friday. Expectations that you get more than 25 basis points, 27 basis points priced in for September the 17th, almost 3 full 25 basis point cuts priced in now by the markets by the end of this year. European futures up 0.4%. FTSE 100 looking to add 23 points. S&P futures, after ending the session a little negative on Friday, looking to add just 0.1%. And Nasdaq 100 futures pointing higher by 53 points. These equity markets are still, of course, near those record highs. Let's split the board and have a look cross asset. You did see, of course, gains in the Treasury markets on Friday on that weaker job sprint. Some of that being paired in the session today with the 10-year at 4.09 and yields up 2 basis points. So a little bit of selling on the benchmark 10-year. The pound at 135, Brent gaining on that OPEC-plus decision up 1.2%, and gold a little weaker at 0.1%. Briefly, of course, we've been focusing on the Japanese markets as well, and we'll get to that story towards the end of this block. But let's get back to France, where, of course, the budget crisis and confidence vote in France is front and centre. Bloomberg's Caroline Connat is outside the French National Assembly with a guest. Caroline.
Yes, Tom, and of course I am with Douglas Yates, 30 years of analysis of French politics here in France, a professor at the American Graduate School in Paris. Douglas, good morning.
Good morning.
So, was that a good method for Francois Bayrou to call this vote of confidence today, given the chances that he's likely to fall tonight?
Well, in his own government, they were somewhat disturbed because apparently he didn't consult them. A half hour before the announcement, he told them. And so insiders who've been quoted in Le Monde and the press have said he thought he could convince people, and he was wrong. On the other hand, it's probably good because if he was going to lose, this gives time for the new government to prepare a budget. Because either France votes on a new budget with bigger defense spending, with some cuts, or they're going to roll over the old budget again. And that means more deficit spending, and it means they don't have the ability to do what they need to do for Ukraine.
We lived that, obviously, just 9 months ago, the fall of Michel Barnier, Bayrou's predecessor. Today, what are currently President Macron's options after Bayrou's fall tonight?
Well, because we've done this now 7 times, I'm very well rehearsed. The first thing he could do, and that was surprising, is absolutely nothing. He did that with Gabriel Attal. He left him in office as a caretaker government who can't pass any laws, but who continues to administer. The second is he could appoint a new prime minister. And the third is he could call snap elections. And that would put, like a general election in Britain, that would put everyone's seat at risk.
But who has any interest in these snap elections? Is that the National Rally? They've been really calling, Marine Le Pen has been calling for new snap elections, even though she's currently banned from running for office. So why does the National Rally really want snap elections?
Well, although she herself has problems after her conviction for corruption, Bardella is very popular. He's drawing young voters into the party framework who'll be ready to vote in the next presidentials, and her party will come out as the #1 party. Very far from a majority, but she could possibly, the National Front, the Rassemblement National, could possibly increase its vote if there were snap elections.
There is actually an interesting time here, because today Marine Le Pen is actually going to find out the date of the appeal for her trial, which is going to happen next year. So she's probably going to find out whether she can actually run for the next presidential elections in 2027. Is that what she's eyeing for? Like kind of skip the snap elections, kind of skip her seat, or and obviously, it's kind of like her turn in 2027.
Right. So once you've been convicted of a crime, you're disqualified for a certain number of years from running for office. But only 4% of the politicians who have been convicted have been disqualified before their appeal. So what we're looking at here is if there's a snap election, her appeal hasn't been heard. She has a very high probability, if she asks the Constitutional Court, that she could run. But in 2027, when the normal election will occur, if her appeal has gone through, and as we're expecting, she's not found innocent, then she would be disqualified.
Of course, so perhaps that's why she wants to call snap elections in the short term. Obviously, the other option for Macron in the short term is to name a socialist prime minister, moderate left-wing, something he hasn't tried yet over the past couple of years when we've had already 4 prime ministers. What is the risk here in terms of the majority passing a budget, having a socialist budget in France?
Well, the Socialist Party, Olivier Faure, actually insists that the socialists are the only ones who could pass a budget without using Article 49.3, which all of the governments have used. We don't know if that's true. A lot of observers had said that the right-wing party, the center-right, the Republican, who are the rivals of the socialists for 4 decades, would oppose that. But I think it would be a good idea. And remember, Macron himself was a socialist minister.
What about the investors' confidence? Because obviously a socialist budget would mean that the savings will be watered down. We've seen the proposal from the socialists saying only 22 billion euros of savings, 44 billions were planned by Bayrou. Do you think that's going to create more uncertainty for investors?
Yes, and I think that's what Bayrou was playing to. He's saying our debt is suffocating us, and we need to do something about it. In the sense that that's really the role of the president to give those lessons and not the prime minister. That was Macron's fault. But Bayrou has spoken the great truth. France is overly indebted, irresponsible in its spending, and it's making more commitments to its European partners in the upcoming war in Ukraine. So it needs to spend more. And in order to do that, Bayrou says we've got to find the money somewhere.
What is the vision from abroad, from the US, for example, about this whole political mess in France?
Well, I think that from the Trump administration's point of view, anything that's bad for Macron is good for Marine Le Pen.
Douglas, thank you so much for your time this morning. Douglas Yates, professor at the American Graduate School in Paris, for this analysis just a few hours before Francois Bayrou's scheduled fall collapse tonight here at the National Assembly.
Caroline Gonard in Paris. A busy day, of course, for Caroline and the team. Caroline, thank you. Now, some other stories making the news this Monday. Controversial tax hikes on the rich, oil and gas drilling, and how the world's biggest sovereign wealth fund invests its money could all be shaken up by the outcome of Norway's elections today. Labour Prime Minister Jonas Gahr Store is bidding to retain power in what is likely to be a tight contest. Store currently leads a minority government after his coalition partner, the Centre Party, quit in January. And Keir Starmer has told his new cabinet to step up a gear and deliver for the British people as he seeks to fend off the rise of Nigel Farage's populist Reform UK party. The Prime Minister spent the weekend completing a wide-ranging reshuffle of his government, appointing more than 4 dozen junior ministers after overhauling his cabinet on Friday. Starmer's reshuffle was promoted by the resignation of his deputy just days after he appointed new economic advisers. And wages for new hires in the UK rose at their weakest pace in over 4 years, according to a survey which will be closely watched by the Bank of England. The poll by the Recruitment and Employment Confederation and KPMG found starting pay growth last month cooled to levels last seen in March of 2021. And sticking in the UK, the London Underground and staff have started a 7-day strike, causing major disruptions across the tube network and threatening travel chaos at the start of the work week. Let's get more with Bloomberg Daybreak editor Mark Perrier. Mark, what is the situation this morning? How much disruption should we expect?
A lot of disruption this morning. People scrambling to get to work, including me. I managed to scoop up.
You were impacted.
I got my workout this morning on an e-bike to make it to work, to be here on time. It's basically the system is down this morning. 4 million people a day use the tube, so there's just a lot of scramble to get to work this morning.
We're going to see that scramble unfold, and you've been a victim of it already. What about the economic impacts? Because it's not insignificant, right?
It's absolutely significant. The direct impact on the economy this week will be £230 million. But that's just the fact that people cannot get to work. You have to look at consumer spending, the impact that this will have on the larger economy. It's absolutely great.
What is the likely kind of political impact? I mean, talk us through the rationale for this strike from the unions and what the potential political impact could be then, Mark.
The workers are the struggle is over pay and working conditions. Mainly the working conditions. They're looking to diminish the working week from 35 to 32 hours. TfL, Transport for London, refuses to do so, saying it's not practical, it's unaffordable. They have offered a 3.4% increase, which they might be considering. But basically, the system is down this week. But the greater impact on the economy is that this comes at a time when the UK economy is trying to regain momentum. So this basically just creates more negativity, adds to the economic malaise of the British economy.
Yeah, another challenge for the UK economy. Mark Perry, thank you very much indeed on the turmoil, of course, expected across London's transport network through this week on that strike. We'll continue to monitor that for you, of course. Coming up, how can startups make themselves stand out from the tens of thousands of other companies then fighting for investment? We're going to discuss that with Peter Specht from VC firm Creandum. It's a VC firm that has backed the likes of Klarna, Spotify, amongst a host of others. We'll get that view coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Europe is home to an estimated 35,000 tech startups, all, of course, competing for investments. So how do they make themselves stand out? And what do some of these startups tell us about some key trends and key themes in terms of how this ecosystem is going to adjust in the years ahead? Joining me now is Peter Specht, general partner at the VC firm Creandum, which was an early backer of companies including Spotify, Klarna, and more recently, Lovable, which claims to be the fastest growing software company on the planet, Europe's largest unicorn as well. Peter, thanks for joining us bright and early in the studio this morning. Let's talk about these seed businesses, the seed startups that you guys have focused on, the 50 the most exciting, and what it tells us about some trends in this ecosystem as you look ahead. What are you seeing? What can you derive from these 50 that you've zeroed in on?
Yeah. I mean, for context, together with around 25 angels and pre-seed investors, we mapped out the 50 most promising early-stage seed companies across Europe, what we call the EuroSeed 50. And it's some interesting trends that you can see again on them, as it's like a snapshot of what is happening right now with the hottest seed companies. And you can look at what they're building, you can look at who is building them and where they're building it. And I think the interesting part from that is what they're building. It's very clear among those companies that the trend is towards agentic AI on the application side. 90% of the companies are building in that across business functions or verticals.
90% of the 50 are building on and focused on agentic AI.
Yes.
Is that a concern for you? The number is. Does that suggest there's maybe a bubble there, a bit of froth? Is there a herd mentality there?
For me, it's, I think, in particular a reflection of the opportunity right now and the areas where we see the fastest growth of companies. And AI is, as you know, one of the mega waves that's happening, similar to the introduction of the internet or the smartphone. And I think it's very natural for founders now to gravitate towards that.
Okay. Talk to us about what's happening on the funding side, because it's been challenging some segments of AI, look at companies like Lovable, they have not been challenged in terms of raising capital. Other parts of the ecosystem, it's been tough. Is funding starting to improve? What are you seeing in terms of the ability for these startups to raise capital?
Yeah. I think on the early stage side, we see a very good amount of funding happening, especially across Europe. On the late stage side, I think we still need more European native growth capital, as a lot of that is still coming from the US. But overall, what we see, if companies show fast growth, in particular in hot areas like AI right now, funding is available.
And which regions are standing out to you in terms of regions, parts of Europe that are on the front foot at this point, and what they're getting right?
Yeah. I mean, if we look at the Euroseed 50 again and look where those 50 companies are built, 19 out of the 50 are being built in the UK. It's followed by France and Germany, and the Nordics, with Sweden as a powerhouse coming as fourth. And I think Spain is maybe the ecosystem on the rise to watch on a smaller scale.
Oh, that's interesting. So Spain is an ecosystem to watch going forward. Look, one key company you've backed that's in the headlines right now is Klarna, and I realise you're restricted in terms of exactly what you can say on this, but you've backed Klarna. They're going to be going through an IPO. They're looking to raise about $14 billion US, and they'll be listing in the US. What does that signal? Could Klarna unclog the IPO pipeline for European startups?
I mean, Klarna is the real first big tech IPO that is happening in a while in Europe, or from a European company.
Yeah.
And so I think it's a very exciting moment for the whole ecosystem. And the hope is, of course, that this is a signal to have more sort of like companies choosing the way of going public again in the future. The question mark, of course, is will they list in Europe or will they list in the US? And while Klarna choose the US way, we hope, of course, to see in the future more of that in Europe. But a bit more needs to happen in sort of like reforms and making it more attractive to this year.
Okay. Well, so as a European, you'd like to see that, but as an investor, do you really give advice to your startup? I mean, does it not make sense as an investor to encourage your companies, your portfolio companies, to think about listing in the US, given the liquidity, given the depth of the markets, given the investor appetite there?
Choosing a place to list is an economic decision. So whatever is best for the company is the thing that we are also aligned with. But as a European, I of course wish that we will have more of that in Europe, because the European ecosystem benefits downstream from it.
Well, another company you've backed, and we mentioned them in the intro, is Lovable, which is this vibe coding software startup. It's been, incredible growth. And again, they claim to be the fastest growing software company on the planet. They've raised a lot of money. The growth has been incredible. And speaking to Anton Osika, the CEO, a few weeks ago, he said he's determined to build out a generational business in Europe and not to list in the US. He wants to be listing here in Europe. Do you think that's realistic for Lovable?
I mean, for Lovable, it's still in the early days. I mean, if we reflect on it, a year ago, the company didn't have any revenues yet.
Yeah.
And 8 months later, they were at 100 million plus revenue. And so it's still some time to go until then. But Anton is really, really focused to building a powerhouse company, a generational company, a global company from here.
And we're at the point where the ecosystem here is maturing, and we're getting companies like Klarna, like Spotify, like Revolut, like Palantir, who, because of the size and scale, are seeing their employees leave. They've got some equity, they've got some cash, and they're starting up businesses of their own. How much of a catalyst is that for the European ecosystem?
This talent flywheel, which you mentioned, is a really important one. And we call it founder factories. And Klarna, Spotify, Revolut, they've produced a lot of founders later on. And I think the current biggest founder factory, also among the Euroseed 50 that we're seeing, is Palantir. So a lot of founders coming out of that, building in particular B2B companies, enterprise software companies. And in the Euroseed 50, for example, 10%, so 5 out of the 50 companies are built by ex-Palantirians.
Okay, 10% are built by people who formerly worked at Palantir. Peter, thank you very much for coming in and giving us some perspective in terms of what's happening, particularly at the early stage when it comes to the tech ecosystem across Europe and some of the opportunities as well. Peter Specht, General Partner at Creandum. Don't forget, the next episode, of course, Bloomberg Tech Europe is going to be dropping this Friday, 6:30 a.m. in London, or London time. We're going to be looking at how AI is changing the way we fight diseases, including an exclusive interview with Demis Hassabis, the CEO of Isomorphic Labs and Google DeepMind. That episode dropping at 6:30 a.m. this Friday, and then will be on YouTube as well. Now, switching focus to sport, Carlos Alcaraz has won his second US Open title, outplaying Jannik Sinner, the world number 1 and defending champion. The title sees the 22-year-old replace Sinner as world number 1, returning to the top ranking for the first time in 2 years. The match in New York was delayed by half an hour for extra security measures, with Donald Trump in attendance. The US president was greeted with a mix of cheers and boos. Plenty more coming up. This is Bloomberg.
We had the quickest stock market recovery in history. We're at new highs in August. And, we're not going to do economic policy off of one number. We believe that good policies are in place that are going to create good, high-paying jobs for the American people.
OK, US Treasury Secretary Scott Bessent, of course, speaking there. Let's get to the oil story with OPEC-plus then, coming through with that announcement of additional barrels on the market, 137,000 barrels per day. The market reaction, in fact, has been positive. Oil prices are up on the view that maybe they could have gone a little bit further. But longer term, there is an expectation that this market is going to face something of a glut. You do have the 50-day, 100-day and 200-day moving averages charted out here in terms of some of the technical analysis as we look at prices in that $60 to $65 range. But to what extent does that break down into 2026? Part of that will go down, of course, to what's happening on the trade front and demand out of the US and, of course, China as well. But OPEC Plus deciding to put more barrels on the market, but maybe less than some had expected. Let's flip the board and have a look at what's happening in France. Of course, a huge day with the very strong likelihood that this government collapses over in France. And French stocks, as a result, pricing this in. The question is, what happens next? You could spend weeks, months wrangling over a budget that they have failed, of course, to pass. This is the valuation premium that French stocks have eroded versus their German counterparts. The PE ratio, the CAC count now 14.6, so valued much more cheaply than their German equivalents. And that story, of course, in focus, how much is being priced in longer term to French access on the political uncertainty. Let's flip the board and briefly check in on a different story. And this is the wealth gains coming through for the Trump family. $7.74 billion. And a lot of this is tied to crypto. And a full $1.3 billion has come through just in the last couple of weeks, with the Trump family backing ventures like World Liberty Financial and American Bitcoin Court. So they are benefiting in terms of their exposure to the crypto industry. That amount, by the way, rivaling the $1.3 billion, the value of their golf courses and some of their resort properties, some of their legacy properties. So this Trump administration and the Trump family, I should say, benefiting from exposure to crypto. Now, the opening trade is up next. They'll be walking through, of course, what's been happening in terms of the pricing around the Fed on that weaker jobs print and the French political uncertainty, what it means for French assets. All of that coming up. The opening trade is up next. This is Bloomberg.